Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news that is full of unexpected data and outcomes. US jobless claims fell last week to 190,000 and this was lower than expected. The number of people still on the unemployment insurance programs in the US is lower too, at just over 2 million. Neither signals growing labour market stress. And the Philly Fed's factory survey was expected to retreat in March following a good rise in February, but it's surprised with another good expansion. And these Heartland Rust Belt manufacturers are looking ahead with surprisingly strong optimism. And existing home sales in the US jumped, and by more than expected in February, up 9.5% from January on a seasonally adjusted basis, although year-on-year sales declined in all regions. Meanwhile, the US economic expansion kicks along. In Japan, March is delivering their strongest rise in private sector activity in 7 months. Their factory PMI rose to a smaller contraction in March, while their services PMI expanded much faster. New orders featured as the driver. In India, their March PMI showed a surging manufacturing sector, but that was still overshadowed by an even faster expansion in their services sector. India is on a fast track. And there are a set of European central bank decisions out overnight. First, Turkey sharply raised its rate unexpectedly, up 500 basis points to 50%. I kid you not. And Switzerland unexpectedly cut its key policy rate by 25 basis points to 1.5%, making it the first major central bank to cut. And in between, the English reviewed and did nothing, holding their rate at its historically high 5.25%. In Australia, their labour market report for February has delivered a big surprise. Analysts were expecting a very good 40,000 rise in their employed workforce, but actually they got an extra 78,000 full-time jobs in the month, plus an additional 38,000 part-time roles. Their jobless rate slipped to 3.7%. Still, the job surge probably means any rate cuts in Australia are now further away. And global container freight rates eased another 5% last week, but remain unusually high because of the reasons for the January surge have not gone away: drought in Panama and pirate activity in the Red Sea. Interestingly, transatlantic rates are now rising, while the largest falls are China to Europe. Bulk cargo rates are staying elevated. And the US Treasury 10-year yield started today at 4.28% and unchanged from this time Saturday. And the price of gold will start today higher by $21 at $2,157 an ounce. But in between, they surged to well over $2,200 and fell back quickly as well. Oil prices are lower today by 50 US cents at just on $80.50 a barrel in the US, while international Brent price is now just on $85 a barrel. And the Kiwi dollar starts today at just under 60.5 US cents, a little change from yesterday at this time. Against the Aussie, we're down nearly 0.5 cent at 92 Australian cents following their strong labour market news. Against the euro, we're still just under 55.7 euro cents. That all means our trade-weighted index starts today at just on 69.6 and essentially unchanged. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this